Right, good morning guys and girls. So we obviously came down quite hard during the early hours of this morning. I remember telling you yesterday that I wasn't convinced that we're going to continue up if we haven't taken out um, that liquidity there. Obviously we took out that as well. I didn't expect this. I just expected that because we were in an uptrend. Already explained in the previous two videos, but I expected at least that we take out those lows, but well, I was wrong. The market is much weaker than what I expected, but with lower lows it creates more opportunities. So let me just remove that. It's always good to just zoom out and get an overview of where we are. So obviously these are June last year, June July's low. We could talk about the June low. Then we have this year's January low. So obviously that is our first support that needs to hold, and this is our second support that needs to hold. So just taking a fixed range pull from this low that we dropped here in May, I think the 19th or the 18th of May last year, and from here I just try and see it as a picture to where we are now, just using this one range. So I've put a fixed range there, always just looking for levels. I'm not saying my levels are perfect or they will be right, but let's just try and work out a plan. So that's more or less 7 months. I'll just call it the 7 month value area low. So you can see how well it was respected there. So you get the idea. Obviously I see support there because this is quite a long range. This was going on to 8 months now. I'm not even going to mark that point of control or the value area high. Let me just take that away and put the other range. So we're obviously in a local range here, from the low over there to there. So there we've got the value area low of the range there, and it's those lows there. So that'll be our first point of sign of strength if we can regain that level there. I've got that one wrong. Yeah, that value area low. Okay, so let's just remove there. So we've got two levels there that we're really looking at quite seriously. And then obviously the swing failure patterns is obvious. It falls right onto this. I'll put it in there just to show our levels. And then we have this swing failure pattern of this low in June. I'm not going to go much lower than this because these are the levels we're looking at today. And then if we look at the naked point of controls, they're quite important. So I've pushed the ones that are relevant to the top. I'm just going to zoom out. I'll cover up to this area. The 23,000 area is quite a relevant area. You'll see it's quite congested there. Okay, so if we, like I said, I'm not going to cover this. 23,000 is our next level down. If we lose this 32, and then you can see there's a naked daily point of control there around 32,000. So definitely swing failure that, and then we have two weekly naked point of control and a daily naked point of control. So that's around 32. With that 32,000 area is quite an important level. Let me just remove. I'm going to take these naked point of controls off because they congest the chart slightly. Then I have this January range that I just want to show, which I think is really important as well. So you'll see that swing failure there, and then that is an order block. So I think I covered that in a previous video. But you see how perfect that is. So swing failure that low, and I just called it the last bounce before we started that huge move up to the top. But that was also our order block. I'll just zoom in so that you can see. I think that's an order block on the daily. Let me just get this chart sorted out. No, it wasn't on the daily. It must have been on the 4 hour. apologies for that. Yeah, you'll see that was the up move and then that slight down move there, and then we went up again, so that creates that order block, and there's always a lot of liquidity around there. So just as an example, we can look at our previous order block. That one there, it came down perfectly, filled it, went up. There was another retrace onto that 7-month value area low before we made quite a big move up. So I see this as an important level today. Well, not just today, but for the foreseeable future, maybe 2 or 3 days. And then the only other levels that I want to include here are some of our higher time frame levels, daily, weekly, and monthly. I've also arranged them. Let me just zoom out a little bit. Okay, once again, 23,000. There's quite an important level. I don't want to dwell too much on those levels. And then the weekly, I think there's only one weekly that's relevant. Yeah, the other weekly is above us. You see that area? I think that corresponds with that January range. Yeah, that weekly. You see that weekly, it created really good support there around that basically $32,000 area. Just removing that again. So those daily levels, I think those are the only ones I want to show, because our weekly levels are not relevant. Monthly levels also not relevant, and our daily levels are way above us. So that's it, short and sweet for the day. We need to hold here. Then there's our next support. There, that 32,000 area is our next support for that order block, and then there's a daily, and then that swing failure pattern, the lows of June. So right, keep our eyes on the charts, and I'll speak to you again tomorrow morning. Cheers.